Hello and welcome everybody to Crypto Rosetta. My name is Savage and today we're going to be having a look at LIDO DAO. Before we jump into the price action, I'd like to say thank you for watching. If you're enjoying the content, please smash that like button, hit that subscribe button if you haven't already, turn on those bell notifications so you never miss a video, and leave us some feedback down below. Also in the description you'll find a link to Discord. Come check it out. It is free to join. Okay, so let's get into this. So first and foremost, we need to talk about the fact that we don't have a lot of information regarding price action here. We've only got from September 21 here, and it has come into this on a downwards move. It does look like a three-wave structure. So at this point, basically, we have a couple of options. Either we can treat this as potentially a wave, looking for a B wave and a C wave, or alternatively, we could look at this as potentially a completed correction, and then looking at this move up here as a potential start to a new structure to the upside. So we're going to discuss this. Within this, basically, I'm looking at this in two ways. So I'm going to go, let's talk about the bearish option. So this would be looking at the potential that within the structure, we have this as an ABC into this low, and then effectively that we're looking at this next move to the upside as a potential another ABC to the upside. So the internals of these two is going to be basically the same with these two options. It's going to be important what happens after this though. So what am I expecting here is a 1, 2, 3, and I'm looking for us to be potentially in a fourth wave. So for as long as we hold this $2.24 to this $1.62 range, potentially we could still look for this fifth wave to the upside, and we'd have to obviously monitor that once we get some structure. But the typical area we'd look to finish would be this $3.86 to this $3.30 range. So this is still possible to actually hold this zone here and look to actually push up one more time for this fifth wave. The one-to-one of this A wave here is actually this $6.67, and that would take us up to this area here, and would actually potentially be a retest towards the top end of this move here. So this is what the one-to-one is, though we need to say, it doesn't have to move that high. Potentially we are already potentially we've already completed that 618. Just change this over here. We've already moved up to the 0.618 of this A wave. So technically speaking, this could complete here. And that would be fine. It's actually crossed above this A wave high as well. So, it's met the requirements that it needs to as a C wave already. But I am anticipating for as long as we hold this $1.62 range, that we could still see an additional push to the upside. Obviously, we're going to monitor this move to the downside and see how we get on. We need to be a little bit careful because, it could become a 1, 2, 3, 4, 5, which is actually fitting into our idea of a flat here. But if we form a five-wave structure here and we fail to actually break back above this top end, then effectively we could be looking at a much bigger decline here where we get something like this is a 1, a 2, and then we look for a 3, 4, 5 to the downside. So a much bigger move to the downside here. So just got to keep an eye on this zone. This zone is going to be key to any further bullish action here in the short term. So what we're looking for is if this is correct, and we're looking at this as an A wave potentially into here, we could then see a B wave to the upside, and then that actual continuation down in the C wave. So the C wave 1-to-1 would actually be down here at this one at 16 cents 91, though it wouldn't need to move that low for it to meet the criteria. Really, this 0.618 would be sort of the minimum requirement that we'd be looking for a C wave. Ideally, it would cross this A wave low. So, I mean, the 786 might be an interesting area if we do actually push down here towards this 32-cent range as well. That could be an area we actually look to find some support. Though the one-to-one is down here at the 1691. Okay, so that is for the bearish option that we're looking at. So within this, there is also the potential, like I said, that potentially we actually completed into this low of this 40 cents. And the way I'd then be looking at this is that potentially, we can look at this in two ways. If we're going to look at it just as a corrector structure, we could look at this as an A, B, and a C. And then potentially we'll find support again towards this B wave low here. Or alternatively, what we could be setting up for is a bigger move here, where this becomes a 1 and a 2. Then we form another 1 and a 2, and then we actually look to push up in a bigger third wave here, which would look, depending on how deep it comes, would look to target towards that $14 range. So we have to keep an eye, obviously, on the subwave structure. So this would all be valid for as long as we actually stay above this zone here of this 87.71. If we lose this 87.31, sorry, this would invalidate this potential of extension here to the upside, and then we'd have to just treat this as a B, and a C to the upside here. And then basically what I'd be looking for at that point would be a move deeper down here, potentially to support, if we want to look for that continuation in a bullish manner. And that would actually be this $1.50.02, so $1.15.02 to the 62.93. So really, if we fail to hold this support box here of this $1.1923 to this 173.20, looking for this bullish potential here, what we would have to do is make sure that we actually stay above this 62.93. Otherwise, it becomes unlikely that this move is going to become anything else to the upside. Once you start to break the 786, the probability that it's actually going to take this low becomes a lot higher. So ideally, we'd want to stay above this. For the time being, though, I am still going with this option that we could see an extension here if this is going to play out. Like I said, if we see an ABC pattern here, it becomes more likely that actually, we're potentially going to break that low again, because, we'd be failing to hold this position. And then really, if we do start to lose this 87.31 again, then I would be anticipating that we're actually going down past this 40-cent range again. Okay, so yeah, basically the idea with this is pretty much the same. I'm looking at this as a flat correction, and here as an A, a B, and then looking for this as a C wave to the downside. The target zone for this as a fourth wave would be between this $2.24 to this $1.68.62 region, and then we look for this fifth wave to the upside. This fifth wave to the upside could look to target out this $4 region up here, and that would be potentially looking to complete our fifth wave if we did move up into the zone. If we lose this $1.62, it becomes less probable that we are within the structure that we are looking at here as a 1, 2, 3, 4, 5, though invalidation really is only down here at this $1.2911. If we do start to break down from this current area, and we move beyond this 50%, potentially, as long as we hold above this $1.1923, we could still argue that we could have some alternate structure here where, this could become a 1-2 again and another 1-2, and then we could be looking for that bullish cause. But really, once we start to lose this $1.19 zone, it becomes less probable that that's what is playing out. So on the short term here, like I said, I'm looking at this potentially as a flat correction for both of these options. And what I'm looking for is basically the move as something like this, where this is an A wave, this is a B wave here, and then I'm looking for this as a 5-wave structure. So within this within this move here, what I'm looking at this is as basically as completed this fifth wave into this low point here. And what I'm looking for here is evidence that we're going to get this fourth wave. So this fourth wave should actually stay within these bounds of this $2.70 to this $2.49. So this would be the 236, this would be the 382, and then this would be the 50%. Once we start to pass this 50% area, it becomes less likely that we're in a fourth wave here. And really, once we cross this zone of this $2.95, it would actually invalidate this potential of having this fifth wave play out to the downside. But for as long as we remain in this zone here, below the, or in the zone of this previous fourth wave, potentially what we could see here is a 3-wave structure move back up here, potentially test some of these areas that we hold as support for period here, and then actually look to break down again for this fifth wave down here towards this $2.22 to this $2.12. If we do move down past this $2.24 zone, then what I'd be looking for is an additional fourth and a fifth here, potentially looking to bring us down towards this 209 to this 194 region. So this yellow box here is the typical zone of a flat correction in relation to this A wave here. This would be this $2.28 to this $2.02 cent area. So this kind of fits within this this realm of this fifth wave here. So obviously these things can extend out, and we'd have to be careful here. Because we do have a 5-wave structure, we'd have to monitor this and see whether we actually complete this 5-wave move like this: 1, 2, 3, 4, 5, and then whether we actually manage to break back above this high. For as long as we don't break above these high points, we'd have to just be cautious of the fact that we could get continuation to the downside as an A, a B, and then a bigger C to the downside. So that's what I'm looking out for here at the moment. I do think that the C wave still has some legs to it, and that would only really change by breaking back up past this $2.70 region. If we did move past that, then potentially we could argue that our wave count is a little bit out within this, or this could be extending out here. But yeah, really, once we cross this fourth wave high here, this $2.70 region becomes less likely, unless we're getting a 1-2, 1-2, and then we're going to look to break down the what I would be looking at if we do actually break this zone of this $2.70 44. What I would then be looking for, is that there could be potential that this is actually an A wave here. We get a move back up for a B wave, and then we actually have some continuation within this move, and then potentially look to actually come back deeper into that fourth wave retracement zone. Which would be this $2.24 to this $1.62 range, and that this wave 4 was just getting a bit bigger, where we get basically within this structure. Then what we'd be looking at is this is an A, a B, this is an A, a B, a C into the low here, then a connector wave, and then basically either a 5-wave move to the downside if it's going to be an A, B, and a C. Or alternatively, what it could be is a W. We get a 3-wave move up, then we get another 3-wave move down as a WXY. If that's the case, what I'd be looking for would be potentially looking to target out towards this $1.87 zone, which would be that 0.382. Though really the minimum requirement, minimum would be looking towards this $2.24 region. So yeah, anywhere within that range would be possible. If we start to lose this $1.62 area, then it becomes less likely that we have this playing out. And at that point, then this fifth wave starts to become less likely. Though, like I said, upside could still be there if we do find support lower down, potentially in this zone here. Actually, it's not that one. I need to change it over. I know it is this one. Sorry. In this zone of this 173 to this $1.20 region. I mean, a good zone would probably be the 618 here. It's got some interesting structural support here. So if we do actually move down past this fourth wave zone that we've got marked out here, then potentially we could find support within this box here of this $1.1923 to this $1.7320. Though, like I said, as soon as we lose this 87-cent region, this bullish cause basically loses its structure. Okay, so I'm going to leave the video there. I hope you found it useful. If you did, please smash that like button, hit that subscribe button if you haven't already. Turn on those bell notifications so you never miss a video, and leave us some feedback down below. Also in the description, you'll find a link to the Discord. Check it out for yourself. It is free to join. As well as that, we have affiliate links for BYBIT and PrimeXBT, both great exchanges that we use on a regular basis. Check them out. Using the affiliate link does help support the channel, and we do appreciate it. Everyone have a great day, and we'll see you in the next one. Take care, everybody. Bye.